Hey everybody, hope you're doing great. Hope you had a decent week of trading this week with the pullback at the beginning of the week. Hopefully, it didn't impact anybody too badly. But we did project it last week that there was going to be pullback, so hopefully you saw that, listened to it a bit, and took some precautions. Everything we talk about here today is based upon PrepToGo's big data and AI platform. It is our recommendations. We're not financial analysts. We're just a bunch of high-tech guys that start to predict company performance, and that translates very well into stock performance. So we're going to cover this week just for the Qs specifically, or really the NASDAQ-100 for the week of May 17th. So let's jump into what happened this week. So our prediction, there was going to be a very near-term 5% pullback. Happened this week. Hopefully people took precautions. We actually got out of all of our tech-related Q NASDAQ-related holdings on last Friday, before the week kicked off. It was a good move for us. We haven't quite gone back into it yet, but we may soon. For the week, stock pulled back 4.4%. The market's not closed yet. There's been a bit of a rally yesterday and some today. So it's recovering, but during the week it was down beyond percent. Our growth projections week over week have gone down a bit. We believe it's just typical seasonal Q2 kind of flattening out and a little bit of pullback. We don't think it's any long term, but we'll watch out for it. Analyst expectations are actually increasing quite a bit, which is surprising. They've been not as bullish as we are. There's about a 3% increase from the analysts' earnings per share forecast, which is good. If we look on the right, there's two sides to this graph. The top is our projections, PrepToGo's projections, which is in the light gray, and then above that is the earnings per shares projections from the analysts in green. And below that is the stock price, our projections versus where the price is currently at. People have asked for this in terms of where we think the stock is going to. And we've tried different ways to do it, but we think this is a better way just to show you what the growth potential is. Right now, it's about 13.7% away from the price targets. This is the lowest it's been since April of 2020. So quite a bit of a pullback. So keep that in mind that there's been a pullback for sure. Is it enough of a pullback to kind of calm the fears of the market of a bubble over inflation? I don't think so. So let's talk about why. For this week, because of that, we think it's flat. We think that the market is jittery. If we look at the bear signals first, there's certainly mixed economic indicators this week, which is why there's a pullback. There's been some things by the Fed kind of commented, but not quite enough. We also think next week, which we'll get into in more detail, is there's going to be some mixed quarterly results within the Q holdings, and it may spook investors. The last is we're still in a market bubble. Outside of the Qs, still very inflated stock price. Within the Qs, we think there's still a lot of room to grow. Outside of the Qs, not so much. Their growth hasn't kept up with the insane growth of their stock price, which means we're essentially in a bubble. Outside the Qs, outside the NASDAQ-100. Some good signs is that growth continues to outpace stock, and there's been consistent growth, not only within the Qs, but consistent growth outside of the Qs as well, which is great, but it still doesn't mean there's not a bubble with the stock. The growth rate hasn't surpassed or even gotten close to where the stock growth is for companies outside the Qs. On the right is just kind of what our forecast is. So we have more bear signals than bull signals. There's actually starting to uptick more volume, or the volume to open interest ratio for calls. So people are getting ready to get into some of the bulls. But right now there's more bear signals than not. And that's why this combination, we believe, is going to be flat for the week. We think it's flat because next week there is major signs that we're going into a bull. And we'll cover that in this slide. So when we look at our projections, so if we look at the May shift, which is in red, it's about the week of April 11th, where that shift really occurred. Our algorithms really get about a 30-day view into what will happen. So that shift occurred right when we expected it. So, this week being the 10th, just about 30 days out. Now, if you look at a week from now, we see that there's a shift, another shift going from a bear to a bull, and that's going to occur about May 25th, which is 30 days out from that. So not next week, but the week of that, we think it's going to start to shift back up dramatically based on that hockey stick. Again, everything PrepToGo talks about is a recommendation from our Big Data AI platform. We're not investors, so keep that in mind. So we think there's a shift going to occur, not next week, the week after that, if the market doesn't get spooked. So let's talk about mixed earnings. Just note that Cisco has moved from last week to this week. If you look at earnings, it's very hard to figure out dates. They're all over the board. They changed the last minute, so apologize for that. But just keep that in mind. The other thing is, from a PrepToGo perspective, we sell almost everything going into an earnings week for companies that are announcing, or if there's a big chunk of the ETF we're into is going to announce that week. It's risky playing options, incredibly risky playing options. It's more risky playing earnings. The single word, we talk about this a lot, a single word within one of those analyst meetings could crash the stock, and even if they had a great quarter, which then has a cascade effect, right? We always talk about Facebook. They had great earnings a couple of years ago. They talked about Russian hackers and tanked the stock, right? So earnings are incredibly risky. So just keep that in mind. We don't play it. We don't recommend you play it unless you're very risk adverse. So there's 5 playing out next week. Just note Take-Two is not part of the Qs, but we love Take-Two, and that's what we're going to talk about them. Cisco, Ross, Analog Devices, Synopsys, and Take-Two, almost 3% of the total Q holdings that are going to announce next week. So let's drill into these guys. If you haven't seen this before or subscribe, figure out how to get into earnings, this is PrepToGo. Just note we're releasing new features next week called Portfolio, where you have 10 recommendations together. We also analyze your portfolio to assess risk and to give you some corrective actions, and to be able to trade directly into your brokerage from PrepToGo. Those are all things that are currently beta. We expect to have it launched out of beta within June, so we're excited about that. So this will change pretty dramatically in the next week to 2 weeks. So for subscribers, if you want to see who's announcing, you select all. You just look at everybody because we filter by status, all active trades versus one that's sold versus caution, which means those are the ones that are near the money. And then you go down to sector, or excuse me, ETF. So we only want to see those for QQQ. And I want to see ones that are close to 3 weeks. So by default, we filter things out for companies that are announcing earnings in 3 weeks. Our algorithms won't ever recommend a company that's going into an earnings announcement. So a couple of them: Autodesk, Workday. Workday is supposed to be doing pretty good, or its expectations good for those guys. So a couple of these guys are coming up. We're talking about Analog Devices and a few others. So let's jump into it. Let's talk about the ones that have some unusual option activity first. So if you're a PrepToGo subscriber, you just filter off the table. You got Cisco has some unusual option activity. Excuse me. For October 5th, 2020 at the, let's dig into it. So let's talk Cisco for a sec. So if you look at this, we don't have a great success rate for predicting whether or not Cisco is going to pull back. We'll talk about them pulling ahead. We're actually exceptionally accurate in predicting when they're going to go up. So when we have recommendations, we'll never recommend a put. We'll only recommend when we feel it's going to go up, just because we have a greater success rate on that. So this is a bit of an older one, just from the earnings. Cisco is actually announcing on May 19th. If you look at this, the unusual option activity is 1.29, which is pretty high. This is for a Cisco put at the October 15th at the 45 strike price, and so it's just 565 volume versus 435 open interest. So some usual option activity here. We don't really put Cisco. We've been tracking since 2020. Excuse me, 2012, and they're announcing their Q3 results. Q3 is typically Cisco's weakest quarter. Historically, it's always been that way. But we haven't seen Cisco growing at this pace since we've been tracking them. So if we look at a call that we recommended a couple of weeks ago, this is our accuracy around calls or stocks. They've done very well. We expect they're going to crush their earnings. We expect that they're going to up their earnings guidance for the year. So we really think that they're going to crush their numbers. All our growth projections show it, and it continues to show it. But there is unusual option activity on them. Two of them expecting that they're going to play a put on them. I would not do that. Well, our algorithms don't recommend anybody doing that. So we certainly see that's going to crush earnings. Again, don't play earnings. Just if you're going to get a stock after earnings, you should always do it a day or two after. Next one is talk about analog devices. I like analog devices. I grew up in the semis. I started off at Intel, went to National Semiconductor, which is now Texas Instruments. We competed against analog devices. We have a very good 5-day success rate with them. We expect that their price is going to go up. They're announcing earnings on May 18th, 2021. We've been tracking analog devices since 2013. They're on the East Coast. They are in Massachusetts, which makes sense since they've started off in a lot of defense. With the pullback, we've seen some of their growth signals not look as good. Certainly short term, we think going into earnings, it's going to bounce up. We think long term, they're announcing Q2, so they're moving to Q3. In their Q3 growth projections, we've seen a pretty dramatic pullback of about 31% for a quarter. So why we think they're going to have a good Q2, we think Q3 is highly questionable. So keep that in mind that they may either doing a couple things. One, the chips shortage is impacting them greatly, so they're slowing it down until it catches up. Or they're making room for an acquisition. Devices does make acquisitions. Or the third is they're in trouble and they're going to readjust their earnings. So we'll see what they talk about next week. We don't have certainty on it, but those are the three options the algorithms are predicting. So just note, we're not recommending them, but we do see that they'll have a good quarterly announcement, but next quarters or future projections, there's some risk there for sure that we've seen in their growth projections. So let's talk about Ross stores. We're just using them as a usual option activity. We're not good at projecting Ross stores. Never recommend it to any of our subscribers. On a daily basis, I think we have for active traders, about 600 to 700 recommendations that they can go through and do momentum plays with, or take our recommendations, which we have about 12 recommendations a day that fit the prep to grow strategy. Ross stores, putter calls, we're not good at predicting them. But they had a little bit of unusual option activity at 0.82. They don't have a lot of volume on this one, so take that with a grain of salt. It's a close one. It's June 18th, so maybe playing it into going earnings. We projected this on May 10th. And they're announcing on May 19th. I think everybody knows who Ross Stores is, so I won't go into too much detail with them. Let's talk about Take-Two. I love Take-Two. Big gamer. So certainly played Grand Theft Auto, Redemption, etc., etc. So like them, so we're going to talk about them. We think they have good projections. They're growing, but their stock has pulled back because the stay-at-home might have changed. Again, Take-Two is announcing their Q4 and fiscal year end results. So they should, as they continue to grow into this year, we think they're going to have a good Q4 and good fiscal year end. They're announcing on May 18th. We have pretty good projections on the 31 days out. Again, this is not significant enough for us to buy into an option. This would be good enough to buy at a stock. But we are projecting that their stock price is going to go up 7.5%. So as a stock, we would definitely buy this. But again, don't buy it going into earnings. It's incredibly risky, but this is an option. Um, this is for May. This option's for September 17th. If you look at where they are in terms of the moving averages, their 200 days 175. It's certainly had some pullback. They're up 2.3% or today. We recommend this today, so we should have a good gain off of this. We like Take Two Interactive. Again, we don't play earnings, so be cautious with it. And we would not buy it as an option. The success rate we buy as a put. So let's jump into the rest of the week. Again, earnings this week, light. There's only a couple of them that we track they're announcing. Again, almost 3% of the total holdings. We think Cisco is going to crush it. We think Take Two is going to have a good quarter and fiscal year. We think, to summarize, analog devices, future growth is in jeopardy, or they're going to make an acquisition or do something around that, which justifies a pullback. Either way, all those things never have a positive impact on the stock historically. Ross, unusual option to in synopsis, same thing. So the ones to watch for: Cisco, Take Two Interactive, and analog devices. Cisco, Take Two, hopefully crush. Analog devices got some funky stuff going on, may pull back. But this is the Qs for the week of May 17th in the NASDAQ-100. Hopefully you like this content. If you do, please like and subscribe. Again, everything we talk about here is from PrepToGo's Big Data AI platform. It's our recommendations based on that data and what the items are telling us. We're not financial advisors, so take everything we say with a grain of salt. But I hope you have a great week of trading, and we'll talk again next week. Take care. Bye-bye.